But welcome everybody. Good to see you guys. I see we got a couple of new folks on here. Basically, we get together Tuesday after the market closes. We talk about some of the flow we're seeing early on in the week, where we are as far as on a sentiment basis, how sentiment lines up, and things to keep an eye on, and for the remainder of the week, so to get a game plan together. We got some earnings. We're in the heart of earnings season. Still some big names left, some key names left. So we'll see how that all shakes out. So far, looks like SWKS continuing the semiconductor theme of strength, regardless of the number. You got Skyworks, SWKS up off of earnings, Snap only fitting this earnings season, that's up. And a couple names down. Data, which is a little beast, that looks like it's lower in the aftermarket. That's a name automatically to keep an eye on. I don't know much about the report there, but keep an eye on any flow into weakness there. Very rare, though, that data catches wise guy activity, but something to keep an eye on. And EA had a decent amount of call activity today. And, like I mentioned, it tells us absolutely nothing about the number. We've seen it time and time again, where you see this steady stream of call buying, okay, throughout a session. And it couldn't be further from valid or on the money as far as the earnings report. But I will say, when you see that type of flow, the most important thing to keep an eye on is the post earnings activity. Okay, and there's your answer to the question you were wondering. I'll give you an example. Intel. Okay, if you remember, we saw a decent amount, similar to EA, probably more than EA, but you know what I mean. A decent amount of action there. Okay, they missed. It was lower off the number. Okay, and again, that flow told me absolutely nothing. These guys weren't predicting earnings. Okay, if you see buying like that into earnings and they have information, they're going to jail. Okay, that's not how the game works, especially in these widely held names. All right, so if they are bullish and they're looking to commit and have exposure to a name post earnings, especially into weakness, they'd be more willing to do that into weakness. They will come back, and a lot of times they will hit it hard. Okay, and Intel was a perfect example of that. Stock gap down, and I don't remember, I think it was a couple days after, maybe the day after, we saw some really aggressive activity come in. You got the stock at a discount. You got the options when IV got smashed. That's another reason to take it easy. If I can't say don't play earnings, because we have more than enough, and that's why they renamed this freaking webinar to Degenerates or Us, or whatever the case may be. But some of you guys are going to play earnings no matter what. All right. But another reason why to take it easy during earnings season is you have the option market already factoring in a move. Okay, so it's not as easy as getting the number right or predicting higher or lower, right? Sometimes you see a stock up and you're still going to lose money on if you bought some calls. So the benefit to buying post earnings action, not only you get a truer picture out of the flow, but now you're buying stuff with IV getting smashed rather than jumping through the roof. Okay. So that's what I would keep an eye on. You like earnings? You like a name that's catching some flow pre-earnings? Keep an eye on it post earnings. And even if you don't see flow, you get some weakness there, you're better off. But if especially you see flow, I think it sets up, it goes from a bad, a low confidence play, I should say, to a high confidence play. All right. So that's what I would keep an eye on, the EA of over the next couple of days. All right. And I'll tell you this about EA. Stock's been destroyed. Okay, this stock's been beat up pretty nicely here. And if whatever they came out with, again, I have no idea. I couldn't care less what the news was, how bad they missed. The price action and the flow in the next couple of days will tell you all you need to know on whether this negative news is already factored in, because this stock did this for a reason. Okay, so it's not surprising that their earnings are bad or they're canceling some game or whatever news is out there right now. All right, the way we know if this thing is factored in, if all that negativity is factored in, if this stock starts to show some constructive, what happened? Oh, some constructive price action and some buying. Okay, we'll see. Another recent name, Caterpillar. Okay, that was another one set up nicely. Had a gap down off earnings, had some buyers come in, and if you were eyeing Caterpillar into earnings and did the right thing and stayed away, you had an opportunity that day they reported of some weakness. All right, so now earnings out of the way. Let's get to some of the market stuff here. As most of you are aware, this market's been on fire of late and does not want to pull back. Okay, hold on one second. I did something here that I can't get off my screen. Oh, okay, there we go. All right, so the last time we had a webinar where everybody was involved, even last Tuesday, because we've been rallying for that long. You guys remember we were discussing how everybody saw the same thing we were talking about, okay, in regards to the market. In other words, you didn't need sentiment indicators, breadth indicators, price action indicators, technicals to realize that this market was a little too hot and needed to pull back. Okay, you had bears looking to short. Okay, you had bulls who were calling for a double bottom, and then you had aggressive bulls like myself who just wanted a better entry because we didn't want to chase price action up in the straight line. Okay, so basically you had the whole world, the whole trading and investing world looking and anticipating a pullback. All right, and if you guys remember the discussion we had, I explained to you how, from my experience, it doesn't happen often, but from my experience, when investor sentiment lined up like that with everybody on the same page looking for something, in this case a pullback, the market doesn't give it to you. Okay, and that's with everything in this market, that's with everything in this life. When there are way too many eyeballs on something, especially when it comes to the market doesn't give you any easy gifts, or rarely does, I should say. Okay, so that was around here, if you remember. Okay, and that's where people were starting to take notice, right at this niner. You had sentiment hot, breath hot, everything. And what this market did instead was go sideways for a couple days. All right, and that little sideways action, because you had some tactical bearish players out there, etc., what it did is it actually softened sentiment a bit. All right, and meaning there wasn't that sloppy bullishness anymore, because again, everybody was looking for that pullback and thought it was on its way just based off sideways action. We were talking about, if you remember, this day in particular, where the market gap down, you could just sense it, right? You could sense it amongst traders on Twitter, people you trade around, that people were just jumping the gun and getting ready for a pullback that just wasn't here yet. All right, and then after a couple of days of sideways, thanks to the Fed and a complete flip-flop from Powell, you had this thing grind out of that sideways action and accelerate to the upside. All right, so basically where we're at now, and that's all that matters, and where we go from here. Again, the market looks stretched, and it wouldn't be surprising to see some sort of sideways action, pullback, breather, whichever way it comes. Okay. But at the same time, personally, I don't want to get too hung up on that. And why the reason is, unlike other instances where once sentiment turned to bullish, I really would put the guns in the holsters, sit in cash and wait for that pullback. What we're seeing throughout this rally, we're seeing a whole lot better sweeper activity. The flow is that much better than it's been each and every one of these rallies. Okay. And one key reason for that, that I can mention something like that, is that they are buying, they're not just plowing into the same names. The buying's been broad. Okay. And when you have that type of activity, what can happen, the market may get tired. The market may consolidate, pull back a bit, or chop around and go sideways. But when you have aggressive sweeper activity still coming into a good amount of names, you can start to look for outperformance in individual names. Okay, so in other words, you're not relying on the market as we were throughout this whole correction. Okay, and you guys remember how many times we spoke about how when you're in this type of environment, the corrective environment, the correction, okay, bear market, whatever you want to label it, that the sweeper activity is not the most important thing, okay, because we're not seeing enough of it. The most important thing was sentiment. Okay, so what you're looking to do, the playbook in a corrective phase like that, when sentiment gets to an extreme, that's where you want to see some signs of flow and utilize that as an entry for that squeeze. Okay, here, sweepers now have taken the number one priority. Okay, to me, they're the most important aspect of the market in what I look at, because like I said, even though some things may need cooling out there, like tech, for example, okay, some of the tech stuff out there has been unconscious. It would be totally normal for them to go through a little breather at the least. Okay, and it's very possible that some of that money comes out of hot tech and rotates into other groups. Okay, and if you guys remember, it seems that long ago, the strength of the market throughout this whole bull market, okay, has been that rotation. If you guys remember they constantly, rather than the market selling off and everything selling off at once, they would rotate from group to group to group and hold the overall market up for a long period of time. All right, and if we see that start to take place, that would be a really positive sign. Okay, and if you look, I'll give an example. Okay, like let's say Caterpillar, right? We were talking about the action just a couple of minutes ago. Now you look like at a name of Caterpillar, right? They announced earnings. This thing is nowhere near as stretched as, let's say a software name like a Coop. Right? So they can't be treated the same, in my opinion. As long as we continue to see, the sweeper activity coming in, buying new names, still getting aggressive in a good amount of names, we start to look towards individual names rather than the indices and trading the same names off momentum. All right, so what hot sentiment tells me now, okay, meaning that people are a little too bullish as far as on the trading side, that tells me to be careful some of these stretched names. Okay, that's what it more so tells me. And at the same time, I want to keep my eyes open to the other names around me that may be catching sweeper activity while these names pull off. Pull back or cool off, I should say. All right, so that's what it is. It's a different environment, and this is, if you guys remember, this is something we were hoping for, we were talking about for quite a while. Okay, we haven't seen this type of aggressive buying in a long, long time in a good amount of names like this. You could go back from the summer. I remember we were complaining about this in the summer. Okay. So there's been some legitimate positive things that have taken place. What initially may be, may have been just a squeeze off the lows. The flow has looked a lot different. All right. And listen, that's why I hate getting in the game of predictions. Like you see guys on TV and on Twitter, they come out and they give out their 1 year forecast or 2 years out what the hell the market's going to do. How the hell do they know what the hell this market's going to do 12 months from now? Right? 12 minutes, we're lucky we could get a handle on what the hell the market's going to do, let alone 12 months from now. Right? How do they know? How do you know the Fed capitulates this quickly and turns dovish from as hawkish as they've been? Right? How do you know what's going to go on in Washington, with Trump and all the shenanigans there, or just politics in general? We have no idea. Right? Trade wars, you name it out there, especially now more than ever. So what we want to keep an eye on, and again, I'm touting my own book here, but if you guys are members to the Steam Room or private Twitter, what we want to keep an eye on is sweeper activity. As long as they continue to get aggressive on the call side, okay, the playbook stays the same. There's no reason to have a bias. There's no reason to get hung up on some prediction. Things change in this game. Okay? What could change? I'll give you an example. All of a sudden, we see the call activity really start to thin out, dry up. All right? And rather than us having new names that it's catching fresh action, new setups, we see the same names get hit over and over and over again. Right? And for the most part, we don't want to chase those. So that means we're not doing much buying. And automatically, that's going to put us in check from getting over bullish in a market where we shouldn't be. Okay? That's what I explained to you guys. That's my seatbelt. That's my seatbelt. Okay? If they just continue to buy Netflix and there's nothing new, right? You guys know that top bets list at the end of the day that I put, if you guys aren't seeing any names on there, throughout a week, or seeing the same stuff on there, that's usually a sign of caution. That raises a red flag. Okay, you don't want to make a big deal out of one day per se, but when you start to see a pattern of that, that tells you that the buying is drying up out there. And then just like when we started to roll over after the summer, okay, because whether we want to admit to it or not, that's what was going on throughout the whole summer. Right? We were complaining it's the same old names. And what you'll see start to happen is once the call buying dries up, that's when in the not too distant future, you'll see put sweepers grab the ball and start to get really aggressive. Okay? And what I mean put sweepers getting aggressive, that doesn't mean one $800,000 bear bet in SPY. That tells us nothing. That player could be the most bullish bull on the face of the earth buying protection because he just got long a gazillion individual names. Okay, you will see action. And you guys know, again, if you're members, did you see that activity? Like certain activity stands out, okay? When they keep coming after a name, boom, 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 and you see one sweeper after the other, and they look like they're committed, right? It's aggressive activity is obvious. When you start to see bear bets line up like that and a lack of call activity, that's when we got to worry. That's when we got to worry. All right. But the good thing, whether you're playing the names off flow or you're just playing your own names, but the good thing is if you're playing names off flow, if you're playing the game right, okay, and you're not chasing the same stuff over and over and over again, the likelihood is you're not going to get caught in a big way if and when that happens. You shouldn't get caught in a big way. All right, because you're not, in other words, you're not going to be buying into that if there's nothing to buy. So it's something to keep an eye on. All right, so that's where we are right now, the market as a whole. We got sentiment hot over a short-term basis. All right, over an intermediate term, you guys remember we were extremely bullish. That has pretty much back to neutral right now. All right, so we're not cooked on an intermediate term basis. Nowhere near that yet, to be honest. All right, we're pretty much neutral. So in simple English, we want to be buyers or flow into weakness. That's the plan right now. At least for me, it is. Okay. Any weakness, any consolidation we see, we see some initial activity come in. That's the stuff I want to own. And in the meantime, okay, I don't know about you guys, but I mentioned this, over the weekend on the webinar and last week as well. My watch list, I know it sounds corny, but names I'm keeping an eye on for sweeper activity into any sort of pullback or consolidation is as long as it's ever been. Okay, as silly as that may sound. And that's in comparison to, this squeeze here or this squeeze here where I had nothing on my watch list. Okay, because what happened? I'll give you an example quickly so you know what the hell I'm talking about. This squeeze here, okay, if you remember, I think it was this one or this one. If you remember how we played it, we had extreme bearish sentiment, okay, so we were looking for buying into that. Then, we were seeing nothing but put activity up to that point. Okay, all of a sudden we saw flow start to turn, right? We saw Facebook, Amazon, Google, I think it was Salesforce, catch call sweeper activity. Okay, there was a couple other names too, but for the most part, I think those were the big bets. After that point, we started to squeeze. There was nothing else. There was nothing else. There was nothing noteworthy from that point on. That was the best action to come in, and it stayed that way. The rest was little momentum squeeze sweepers in weeklies. That's never going to make a top bet list for me. You guys know that. Those guys flip on a dime. All right, and we were talking about that. But that was the difference, okay? Where in this rally, there's been some heavy-hitting action there, right? And not only in big names, there's been some under-the-hood names that have caught solid activity. So I'm just giving you guys an idea of what has been different, in this squeeze as opposed to the prior squeezes. All right, and everybody wants to know, the magical answer to the question, is this a bear market rally or is this a rally? And if you think about that question, what does that mean? So in other words, if you think this is a real rally, what's that mean? You go and you jump in here, throw darts at any names and just get long here just because you think this is a start of a new bull trend and not a bear market rally? You still could get walloped, right? We could get a decent pullback or a breather here, and depending what options you buy and what names you buy, you could still get hammered. All right? Or, this could be, we could still be in a bear market, and there could be a pullback, and there could be action into that pullback that sets up another strong rally from that point, which can be profitable. So there's no reason, you know what I mean? There's no reason to even think about that. There's no reason to even think about that. again, you keep an eye on the flow, and I think the flow will tell a lot. If you're more interested in the short-term stuff, right? Day trading or flipping or whatever you do, but the extreme short term, there's nothing better than sweeper activity. There is nothing better than sweeper activity, in my opinion. It's instant momentum. The more sweeper activity you see, the stronger the momentum. There's not a better momentum indicator on the face of the earth. All right, and if on a swing trade basis, a position basis, like I just explained to you a couple minutes ago, keep an eye on the quality. On the quality. The more names that see quality activity, the better the environment. Why? Think of it logically, okay? We're just paying attention to what the wise guy money, right? The smart money, the institutional money, whatever they may be. They know a lot more than you and I. They move markets. They're actually physically drawing the charts we're all looking at, okay? We're not watching what they're getting long or positioning for clients. We're watching what they're aggressively speculating on in the options market. All right, so when that type of money is aggressively speculating in many things, that's a risk-on environment. That's a bullish environment. Okay, and when they're not, that tells you the same way a lot about the environment. Okay, if they're not willing to take that added risk and speculate in the options market, that means they don't feel too good about the market right now. So that's the significance, in my opinion, off of flow and this type of activity. Because the options market is primarily used for hedging purposes. People don't realize that. They think every order is a bet on direction. It's not even close. All right, so we're just trying to focus on that aggressive activity where there's a high probability that is speculation from the smart money. All right, so when we're seeing, sweepers in Netflix, like we've been seeing in that type of size, for the most part, where that action's coming from, that's not all the exposure they have to Netflix, right? They're probably sitting on a lot of equity. So that's just money they're looking to utilize leverage and get aggressive with. So that's why I think it's important, and why I stare at it all day long and do nothing else. Anybody have any questions on anything I mentioned? And listen, you guys in the room, and you guys are on private Twitter, you're members for a reason, and that's for me to try to paint the picture to you guys, the interpretation of the flow in what I'm seeing. And little by little, as you see more of it, get better and better at it yourself. But that's going to come with time. Okay? But the reason you guys are members is for me to take the legwork out from you, the legwork from your end, and explain to you, my interpretation of what the activity may be signaling. All right, so that's generally the game plan put here. But does it make sense? I mean, does it make sense to you guys, or you think I'm talking out of my rear end here? Cool, makes sense. All right, so let's go over a couple of names that have been seeing action. Okay, again, some may be hot. Some of them may have pulled back. Some may have earnings. But I'll just give you, a little idea of some of the names, some of the action that's caught my eye. And this way you guys, whether you trade off flow or not, I think it's a luxury when you see aggressive activity that gets me excited in a particular name. Because here's the difference with me and a lot of people you may know out there who look at flow. When Bank of America catches 100,000 contracts on the call side. That doesn't excite me, right? That's Bank of America. Bank of America could get size, right? Bank of America, when they want Bank of America, they could get aggressive. Apple, same thing. Even Facebook, same thing. But when I start to see impressive activity in what I like to refer to as some of the under the hood names, okay, that always got me excited. Whether I'm playing options, equity, whether I decided to build a position for clients and it had nothing to do with the actual bet itself, but I was introduced to it by that sweeper. Some of the biggest winners that come out of corrective phases like this, you will see early on catch sweeper activity. And sometimes, I'm being honest with you, sometimes the bets aren't even all that. Sometimes the sweepers are small, but they're in a name that doesn't catch sweeper activity or just started trading options. All right. And we went over this in the room. A lot of names like post IPO. Okay. So you have a company come public, and then as soon as they start trading options, that first batch of aggressive activity you usually see there, those end up being gigantic winners. All right. A lot of you may remember a name like IQ. Okay. I got stories for you guys that can take out 3 other webinars of activity that came into names like GoPro, which is a piece of garbage now. But back then, that was one of the best names ever post IPO in regards to sweeper activity. That thing was an animal. All right. Roku was one that caught sweeper activity post IPO and then exploded. All right, so we're seeing a decent amount of that now. We're seeing more of that, I should say. Okay, and again, that was lacking for a good amount of time here. And you guys know the software names. Okay, the software names were hot prior to the correction, and they've gotten hot leading us out of this correction. All right, most of them have held up well, right? Most of them have held up well even through the correction. And I'm not talking, like, I know you guys know already, names like a CRM, right? You know that now, which caught another big bet today, okay? So those are the names you know. But there are other names, okay, that people are just starting to recognize that a lot of times you can catch them early, or at least have your eyeballs on them early. You see weakness, maybe that's an entry that lines up with what you're looking at as far as technicals. But again, you are already aware of what these names do, how good they look, and you're ahead of the game. Let's get to a couple. Here was one, Coop. Oops. All right. But this thing, look at this thing. This thing's gone now, right? That's an explosion from the lows there. Explosion. All right, so there's your move there. That was one of the leaders out of the software camp. All right, and just exploded out of there. Didn't come out with earnings yet. That has nothing to do with earnings. Just straight up price action there. Another name, some of you may know it, some of you may not. ZS. I know those of you who are members are aware of the name. Okay. If you remember, we started to see really small sweeper activity back here, right? Post IPO, had a big rip off earnings. Right? Then here, we started to see a little more action, a pickup in action, rip to highs, but then the market fell apart. All right. Held up, would see some sporadic call buying here and there, nothing important. And, just recently on this 7 bar here, somebody laid into some December calls in a big way, in a really significant way for a name like this. All right. So it doesn't mean this thing is going to go into from a straight line from 45 to 90. I'm sure and hoping there will be dips along the way. Okay, there may be even some consolidation here off this niner for a little bit. That would be ideal. They are December calls, so hopefully we have a little bit of time. All right, but again, a name that if you trade these things should be on everybody's list, everybody's watch list, keeping an eye on this thing. Okay, and I know I'm not an earnings guy. Okay, so if I know about it, it was pretty significant. Their last couple of quarters have been ridiculous. This quarter here, if that was in a normal market environment like we're in now and not liquidation mode, the market was in liquidation mode in December when this thing announced earnings, this thing would have been up 20 points off that number. They have been, right, Gordon? And I'm being honest. You know me. I'm not a fundamentalist, right? I don't pay attention to numbers too much. But even myself, I couldn't miss it. You know, I see an analyst note on it, or I saw the quarter. It's just unbelievable. So again, this is what I was telling you guys about throughout the whole correction. Keep your head up. Don't get too discouraged. Don't short. Don't get wrapped up into that bear story, please. Remember me telling you that? The reason is because at the end of it, when that bear market or that correction comes to an end, names like this break out, and the Nvidias of the world, you name it, the Twilios, all those names that you never heard of that were trading at 30 and 40 bucks and now you salivate over, they all started like this. They all started like this. Okay, so that's exactly what I was telling you guys throughout the bear market, to just stay positive about, because you'll get introduced to stuff like this. All right, so yeah, great call, Abby. That was the other name I was about to mention. RNG, they have earnings coming up here. Okay, so again, unless you're just, which I know some of you are, but play the grind into the number. Okay, for that big ticket. If you're looking for that big hit, okay, you want to see, some breather or some weakness off earnings. Maybe they line up another entry. If you get it, you may not get it, but it's coming up here. That's on February 11th. But this too, I never heard of this name. You guys know in the Steam Room. Not many of you guys have heard of this name, but it's $100, 90, whatever, in the software camp, and seeing aggressive buying. Okay, if you remember, again, I sound like a broken record to some members. I apologize, but we have some non-members on here, so that's why. The hubs. Okay, this is one example similar to the RNG, the ZS, back here. The stock was in the 90s. I never heard of it. Catches sweeper activity. It's in the software group. $90. Crazy growth. The stock went to 160 in a couple months. 160. $70. Bing, 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 like that. All right, look at this thing, by the way. Sheesh. Now, this is another name. I haven't seen any new action in it, but there's another name, Hubs. Besides they caught a sweeper once upon a time, I have no idea what this thing does. Zero clue. All right, and there are a lot of other names. What other names? Give me some other names. Any other names catch action? You guys know the Twilios of the world, right? These are the more popular ones. The Now. Another name we were just talking about, if you remember on that Sunday night webinar, Intuit. Now, this is a more popular name, but it's almost like a forgotten name. I forgot this name. I forgot about this guy. All right. So here's Intuit. Catches action into this little breather here. Really good looking July sweep. I think it was July. Right into this breather. And catches a big upgrade. And she's gone already. Look, whoop, she's getting loose. All right, one thing I want to make mention of, because I ran into this problem the last time. Here's the thing you got to understand, though, too, and I fall into this problem a lot. You got to have an idea of what you want from these things ahead of time, okay? Because here's the trap that a lot of us fall into, okay? It's the biggest mistake, I think, amongst traders: bull market, bear market, sideways market, okay? You fall in love with the story, okay? So let's say, for example, you're looking, you got all excited, you see Intuit action, you love the story, you got an entry here off a little bit of a breather, but you're buying front month, right? Or you're buying even, weeklies or 2 months out. And what you're trying to catch is the big home run, but you're only going a month out. All right, that's what happens. Traders fall in. We had this discussion, a whole webinar, if you guys remember. The in-between. You don't want to fall in between, okay? So if you're looking for the home run here, all right, what you're looking to do is you're looking to go further out in time, right? You're looking to have as much time as possible, and this way you can survive some pullbacks along the way. All right, if you're in it for just a trade, then you could go with shorter term strikes, but at the same time, you get a rip like this in a week, you got to look to lock that in, roll, do something, okay? You can't get in front month and just because this happened, say, you know what, now I'm looking for more, and stay in the same calls, because as soon as that thing pulls back, now you're stuck now. All right, so that's what happens a lot of times with these things. You want your cake and you eat it too, or however the hell that saying goes. But, you got to determine, you got to have a game plan like anything else ahead of time. All right, so like an example, ZS, if you're looking for the big move, December's perfect. Okay, perfect. If size down if you have to, even better, because you can survive dips. You don't have to worry about it. You're not going to panic and stress over it. All right, if you're all excited about the big move, that's fine anyway. You're looking for a big hit here. All right, if you're looking for a trade, you are in it already, or if you're not, you're looking for some consolidation, and then you're looking for a quick move to highs, and you're looking to lock that in. All right, but you don't want to get caught in between. I had to throw that out there because it happens way too often. I even get into that pickle. Well, what happens to me, I sell everything too early. That's my problem. I'll get gassed up on a ZS. I'll give you an example of that. A QSR. It's not that I was excited, but I went out with a decent amount of time to hold it. I wanted to hold on from that particular day. I wanted to hold something out of the correction. All right. And then QSR had a nice rally. And you know what I did? I sold it. All right. And then, you get this move and a gap up and all that 9 yards there. But that's my problem, and something I got to work on as well. What else? Anybody else have any of these tech underbelly software names before we get into? Yeah, Steven, we were looking at that MIME, M-I-M-E. Look at that. So, we don't want to chase that, but if we do get that breather, this is something we want to keep an eye on, no doubt. That's a strong move right there. You got earnings coming up there too. Maybe get some weakness for an entry there. That would be good. Here's another one. VRNS. This just caught some action yesterday. This looks like has a little more room to the upside here. You do have a niner. So you don't even need to know the niner. Look at the move here. This isn't a straight line, man. There's no pullback there. So we need a breather on some of these things. We need a breather. On a lot of these things, we need at least a breather. All right, and that's why it's good. You have earnings coming up in some of these things. So if there's some profit taking off earnings, be ready. Be ready. Like, what's this data down right now anyway? Look at data. Data's been a monster. What's this data down? Where's she at? 129. What? Oh, that's nothing. So she's over here. Look at this. That's what somebody said the stock is getting killed. So here's data. You're going to be down 4 tomorrow if you're lucky. That's probably an opportunity if you ask me. If she catches a sweep, no doubt. You know, this is barely a pullback. This thing, it could have been down worse on a non-earnings event. You know, look at the move. How do you stop from selling too early? D. Scott, if you figure that out, please share it with me. Please share. The only way that I've seen anybody conquer that in this game, I'm being honest, D. Scott, that I've seen with my own 2 eyes proof, sizing down. Sizing down is the only way. You know what I mean? So you take smaller size, you could go out further in time, and that fear of losing that profit doesn't bother you as much, you know? Otherwise, I guess it takes a rare breed to really size up and let that thing have a leash. I don't know. Again, you're talking to the wrong person there. Yeah, I think that's the best way to at least start working on it. Yeah, and Gordon has a great point too. You don't even have to catch the whole big move, right? When like we have a problem selling, locking in profit, that's not the worst thing in the world when it comes to options. But like Gordon just pointed out, what we could start doing, you start selling pieces, right? So sell half. So little stuff like that. But I guess it all depends on your personality. But it's something to work on. It's a tough thing, D. Scott. Don't let anybody fool you. It's not an easy thing to conquer in this game. It's a tough thing. Steven, yeah, TME. Again, I don't know. This is a music name. I guess it's like Spotify or something. But I would definitely not sleep on this name, without a doubt. You had legitimate action come in on a Friday. There's been some bull flow. I don't care what this does in the interim. Somebody mentioned, it's getting beat. This is nothing. Okay. When these things, especially when they're a little thinner, they're an IPO. They're not too much stock out there, outstanding, trading on the float, stuff like that. These things can get a little volatile. All right, but they can move when they catch some real buying, real deal buying. These things explode. Again, I tell you this Roku. I remember it vividly because I botched this trade pretty badly. Like this was a really bad botch on my part. But come on, this is so slow. So I remember this Roku. Okay, look at this Roku. Started catching action post IPO, and they were early. Okay, so you can see here doing nothing, and then you see how it floats lower here. So they started buying it as this thing was floating lower, and it doesn't look like much, but it continued lower. And the market was, if I remember correctly, moving higher. So it was like it felt even worse. You know what I mean? Because it was doing nothing. And then you had a little pop here, and that's where a lot of people got cute. They were in only 2 weeks out, so they didn't have enough time. So they wanted to play it safe, get out. They got their money back, taking scratches, and then boom. And look, this thing looked harmless up until this, right? Explosion. Look how quick it happens. happens quick. And IQ, you guys saw it with your own eyes, right? That's not too long ago, the IQ. You guys remember what happened in that thing? Yeah, that IQ made some accounts. Explosion. So that's why when the risk appetite's out there, they love to play these things and they love to gun them. They love to gun them. So good call, Stephen. TME, without a doubt, I would keep an eye on. We got a couple other questions. You waiting for Uber, Airbnb? No. I don't pay attention to the IPOs. I'm not an IPO guy. What happens is I take a liking to sweeper activity that happens to be in some post-IPO names. Okay, and the reasoning behind that, if you think of it logically, nobody owns these things. Okay, nobody owns these things. Nobody knows about these things. They're new. So that's the point I'm trying to make. Like, if real buying comes into this TME, right, when they really want to buy this thing, like, this thing is going to explode. Whereas, you get a financial name or a bank, you're not going to get that what I just showed you in Roku and IQ. You know what I mean? In a bank from here, for example. That's the point I'm trying to make. I'm not interested in IPOs. I'm talking about sweeper activity. That's all. In these type of names. Calcs, yes. Now, is this? I don't know what this is, George. You may know. Is this a software name? What the hell is? Or is this just a tech name? They got earnings coming up, right? When is it? A couple days? Tomorrow? When do they report? It says here February 5th. Oh, that's today? Oh, they reported, you're saying? Where? After the close? Oh, yeah. I see it down about $1. Is that right? This is an interesting little name. Beat on earnings, light on revenue. Yeah, we'll see. Had a nice move again, percentage wise, right? Would have run from like 9 to 11. So it's showing 10, probably middle of the range here. That might be an entry, George. I think they're going to come back and buy it. The way they were buying it down there, I think they come back and buy it. So for those of you who may not know the story, the CALX, around this neck of the woods here, they opened the largest position of open interest. And, like a lot of other things in the market, had a strong move, topped out about 11 in light change, and they had earnings. George is saying they beat on earnings. They were light on revenue. So stock may come in a bit, had a nice run. And if it does catch some action, that would be your secondary entry there. But thanks for the heads up, George. I didn't even know they were reporting today. I didn't even know they were reporting. What else we got? Abby saying, big picture, V-shaped. I didn't see any meaningful pullback until late 2015. Are you talking about? You're talking about 2015, Abby, or the 2000? You're talking about that first rally, right? Yeah. See, I mean, from my experience, Abby, and you bring up a good point. From my experience, when you get this type of move out of a phase like that, I know I sound like a conspiracy theorist, but I'm telling you that's, in my opinion, the number one reason this market hasn't sold off yet is because everybody thought it will. And what usually happens, you get the bulls and the bears to just capitulate. All right. And I'm talking about everybody capitulate. All right. And that's when usually you and I and everybody else, even though we've been long and have been taking advantage of this rally, we feel like and really feel like there's no pullback coming. You understand? That's how strong this market is. It's never pulling back. Okay. And here's a couple things too to keep in mind. How do we know that that hasn't happened yet? Two things. One, hedge fund exposure. We were talking about this in the room today. Hedge funds aren't in yet. Think about that for a second. They're not in yet. Okay, that's one. Two, the fund flows. If you look at the fund flows, they're still coming out of funds. Okay, so once you start to see, and I think honestly that's what's been going on here, if you ask me, these last couple of days, this lift here, I think slowly now we're starting to see them get back in. The hedge funds are likely buying. The fund flows will probably likely see more money come back in when the next report or whatever. So when you start to see that, that's usually when this thing runs out of gas. All right, and then you're going to get a pullback. You're going to get some sort of pullback. Like Avi's talking about back in 2000. I don't know if he's talking about 14 or 15, but this is what I think you're talking about because I remember it. This chart when I'm on the webinar, so laggy. All right, so this was 2015. I don't see it on here, Avi, the screenshot. That's the problem with it. See here? So you had, runaway rally, but then look how it just stopped on a dime at that niner and rolled over. So, this rally already looks different. I think honestly, Avi, it looks like this rally more to me, where we're running through niners, and then eventually when we top out, we're going to get something more like this, you see? And then a rally to highs. And then you see, like right here, okay? At this point here, like nobody thinks the market's ever going down again. And then you get this to have them poop themselves. So it could look more like this. But again, we don't know because we don't know, what pops up between now and then. But from my experience, the dips usually will get bought until everybody capitulates to the upside now, right? We had the capitulation to the downside into Christmas. Now we need a capitulation to the upside. Yeah, those are the two things, Avi, that I would keep an eye on, that I'm looking at: hedge funds and just fund flow in general. The hedge fund chart, the fund flow chart, I don't have it up here. Hold on. I'll show you guys. Zero, I think it was Zero Hedge or Business Insider. Somebody had it recently where I showed. Oh, here it is. Come on. There we go. So you see that? I don't know if you guys can make that out. That green line is the S&P, and the blue line, equity flows. All right, and you can see, there's the market rally. Look, mom and pop, the poor bastards, they're all out. So what's likely to happen, you're going to see this go whoop. And until then, and that could be, the next report. That could be. That could be what we're seeing right now happen in price. In my opinion, I think it is, to be honest. because like the hedge fund exposure too, that, god dang it, that lags a couple days. It lags by a couple days. So as of the beginning of the month, hedge funds had no exposure, the lowest exposure in ages. All right. So I think this little rip here is likely them starting to get in. Do I trust inflow outflow fund charts? No. I mean, what do you mean trust? They usually coincide with what we're looking at. The only thing I trust is sweeper activity. I don't trust David Yu or anything else for that matter. You know what I mean? What do you mean by trust? It just, a lot of times those things will line up to what we're seeing, right? What we've been seeing is this aggressive call sweeper activity, right? We're seeing Netflix get annihilated on the call side. I mean, annihilated. We're seeing a lot of names get tattooed. So that's who I trust, And again, usually, and here's the point I'm trying to make with the fund flows, the hedge funds, even though like you'll see shorter term sentiment hot, okay, the stuff we look at, and it's hot, but there's other stuff around it, right? Like we look at both the intermediate term and the short term. When you see short term sentiment not get sold off and instead, go sideways or intraday fades to wear it out a bit, it's pretty bullish. It's pretty bullish. Sentiment right now, as of the close today, was hot, yeah. But believe it or not, Abby, what we've been seeing, the little pullbacks, okay, like this sideways here, we went from hot to neutral. So that's how quick the short-term stuff moves. But it's good for us who are that nimble because we're quick and sentiment's quick. But like, for example, intermediate term sentiment is not hot. All that stuff that lined up bullish that we haven't seen since 2008, that's not hot right now. None of that's hot. The Nova Ursa, which we follow a lot, you guys know, that's not hot as of yesterday. Put the coal as low, not scorched. The stuff that has been hot, as we use that term, is the extreme short-term stuff. The trading stuff. Ronchero, you're the only one I trust, so I wasn't aiming that towards you. All right, but good points, good question. Anybody have anything else to add? I see a couple of questions on puts and stuff like that. I'll be honest with you guys. I don't see, again, there's put action. There will always be put action. From what I see selective put activity in certain spots. Okay, I'll give you an example. Today, what I'm going to remember as far as put activity, and the only thing I'm going to remember are those put sweepers in the online banks, in weeklies. Okay, we know what that was about. Schwab ended up lowering their guidance the afternoon. Okay, so that's what that was about. That was in weeklies. The other aggressive put activity was fossil in weeklies. I don't know what that's about. Okay, but that's aggressive put sweeper activity. The rest of everything else, looks like earnings protection and replacing ETF protection. You know what I mean? I'm not seeing what we were seeing throughout this whole environment from this market rolling over throughout the correction. Again, we're going to see put activity. The call buying, when the call buying will tell you more than the put buying. Okay, don't get me wrong. There's aggressive put sweeper activity, and especially on an intraday basis, we talk about it all the time that you guys can, make money with. But as far as a theme out there, a bearish theme out there, I don't see. I could lie to you and say, yeah, I see some. I don't see anything, and that doesn't mean the market can't breathe here. That has nothing to do with it. And you got to understand, think about this, okay? If you got long and you bought some SPY protection, here, Ranchero, you hedge a lot, right? You put on protection. If you put on some SPY protection down here, Ranchero, early January when we started to squeeze, okay? So you got long and you put on some SPY protection. What are you going to do over here now? That protection you put is toast, right? So the likelihood is you're going to replenish that protection, right? You want to be protected. And is there a better spot to do that right now? That's what we're seeing. So they may get lucky and the market may, start selling from here and pull back. But, the flow wasn't signaling that. They're called smart money for a reason. Up here, if you're going to get long or if you're in stuff that's been red hot, you're carrying a big book. You're nuts if you don't have protection. Yeah, and you hope they go to zero, right? That's the whole point of protection. Again, the riffraff and retail, that's why a lot of those sentiment indicators were great. Retail, what they do is they start with protection, and then as the market sells off, they want to make money on that protection. You understand? They see their longs losing money. They see their protection green in their account. So what do they want to do? They want to gravy up that protection so they can make money then too. They want to always make money. And that's where it creates a buy signal. But, the smart money out there, they're putting on protection and they hope it gets wiped out. They hope. So that's what I think we're seeing a lot of the put action out there, especially in ETFs. I'll give you an example. EEM, like there was April put buying today. I mean, that's the epitome of what I'm talking about. Any EEM protection is useless right now. Any EEM protection you had in January is useless right now, right? Maybe you have February protection you need to replenish. You got to look at this move. Look at the move. All right, so again, we try not to predict too much. When you're looking at sweepers and you're looking at sentiment, we anticipate, right? We're not reacting, we anticipate. It's different than technical analysis or price is the only thing that matters type traders, okay? Because when you're trading off sweeper activity and sentiment, you anticipate. That's where the money's made, right? That's where the edge is. But at the same time, you don't want to act like you got a crystal ball and start forecasting, right? You don't want to you don't want to try to make more out of the flow than what it's telling you. And right now, it's telling us, in my interpretation, there's aggressive call buying, okay? That's bullish. There's protection in earnings names, or names that are reporting earnings. That's totally normal. There's protection in ETFs, totally normal. And selectively, each and every day we see a name or two that catches aggressive put sweeper activity. That's selective put activity. Just like we were seeing a downturn, selective call buying, I'm not going to get excited if the market is selling in a downward spiral and one dude out there wants to buy some Facebook, what good is that going to do us if the whole market's going down? I mean, that's right. That's what we were talking about. So now we've been seeing the opposite of that. We've been seeing the opposite of that. But I can tell you, on the sentiment side, the good thing about what we're seeing is that there's not a lot of believers in this, man. And I'm telling you, you guys remember we were talking about that. When this market finally bottoms, okay, and there's a squeeze or a rally, when it's for real, no one is going to think it's real. Nobody. The fundamentals will still be awful. They're not going to be good. There's not an alarm that goes off. Yo, Ranchero, Abi, listen, everything's beautiful again. Get long. Nothing happens that way. That's not what happens. Everything still looks like crap. Okay? But just like on the way down, the market is forecasting 6 to 9 months out. It's not looking at what we're looking at right now, right? When the bear market tornado was ripping apart sector by sector, one at a time, from the beginning of the year, not October when the markets rolled over, from the start of 2018 when the whole riffraff ran into the market. Remember this? Remember when inflows were at record levels, the highest amount of inflows ever, right into this. Whoop. Okay. Since then, throughout, there's been a bear market tornado ripping apart sector by sector by sector, finally getting tech and the indices last. All right. And if you remember, what were they saying as the market came down? Oh, but the fundamentals are good. We went lower. But the earnings are good. We went lower. But the earnings are good. We went lower. Then as soon as we started hearing the word recession, as soon as we started hearing the Fed had to capitulate, as soon as we started to see the reasons why this market has been selling for all that time and has looked awful, that's when we finally start to bottom. Right? As soon as Apple said we have a disaster on our hands in China, that's how this game works, man. So that it's a good thing if you can't get yourself to believe this rally's real. It's a good thing. And not a lot of people are. Yeah, Ani brought up a good point. You guys on private Twitter saw, I even posted in the market update, inverse ETF buying spiked yesterday. I mean, think about that for a second, right? They're buying leveraged bearish ETFs. So there's a lot of non-believers out there. And, you know, what usually happens is this market gets everybody to believe. And at that point, you know, you missed a lot of the move. So, but again, we'll take it step by step, day by day. The most important thing is try not to chase. You know what I mean? I know it's hard, but you want to stay out of trouble, especially when we got, you know, a squeezometer that's a little bit hot. That's where those short-term indicators, I think, work best. Okay, when you see those things hot, all right, you can't buy stocks that are up 5 straight days in a row. Unless you're scalping them or you're flipping them, you know, if you're flipping them for 50 cents, obviously that doesn't apply. I had somebody tell me, oh yeah, you told me sentiment was hot. You know, the market went down, but I sold my calls for 30 cents higher the next day. That's not what I'm talking about. I'm talking about you can't go all in, build positions in a hot squeezometer into something that's already moved like this. That's my point. Okay, because there may be some upside left, but when it finally takes a breather, you're going to be stuck and scratching your head while you're losing money. So we look for new setups. You know, we look for new setups. Like I said, the cat, you know, the action wasn't anything special there today, but you know, this I'm giving an example. You know, this looks a lot better than Some of the other things. Yeah, this DWDP, I wanted to see them hit this thing hard. You know, there was a little bit of flow there, Abby, and she was green today. A little squeeze. But yeah, you're on the right page anyhow. This is what I'm talking about. You know, this is what I'm talking about. And we can easily see that happen, guys. We can easily see the market chill out. Some of the hot names chill out for however long, a couple of days, a week, who cares? And they start moving money back into these things. You know, if the market's bottomed, a lot of these things should start acting better out there, whether their earnings were bad or not. You know, again, Caterpillar, I'm just using it as an example because it's one of the recent stuff, right? You had earnings, it sold off on earnings, but there were buyers there. There were buyers there. So that, you know, that's the stuff, anyhow, that's the stuff I'm trying to pay more attention to. And hopefully some of the other things, the good looking stuff cools off or maybe pulls back a bit and gives us a window there. You know, gives us a window. X. Yeah. We've seen some flow there too, this X. We've seen a little flow there. Nothing major. Yeah, GDX, the miners, the flow's on fire, the price action's on fire. They've looked great. Everything, Alex, in the whole group, individual names, ETFs, everything. You know, some of the names, I'm sure you know, there's gold, one of the more recent names they really got aggressive in. This is the old Barrick Gold. They switched symbols. You had a pullback there, little bump up. But yeah, there are a ton of names. Silver, that's catching action. Some of the silver names, you know, the names are tough. You got to get lucky. You know, sometimes I know people who buy the little guys and they end up doing better than some of the big names, like this Umana Gold, AUY. You know, the gold miners, that's the good thing too. You can roll the dice. Oh yeah, that's the one, KL, right? What a beast. Oh my God. Are you kidding me? What'd they do? They strike gold? Unreal. Yeah. But see, you got to get lucky in the individual names. Sometimes you get something like this. Other times, you know, you get one that just grinds. But in the past, like a GG, this does well when they heat up. AU caught some recent flow. Now, a lot of them been doing well. You know, even the cheap garbage. EOLS, that's a minor, Ronnie? EOLS. Botox. Oh, this is biotech. Yeah, we've been seeing some of those cheap biotechs seeing some flow too. That one had earnings today. I didn't even know it. Someone brought it up to me. ARRY. Big day there. Yeah, you just got to be careful with these things with the FDA dates and all that stuff. But there's no other way to play these biotechs. You put in what you want to lose, and that's the best way. You get lucky, you make a nice little score, you lose what you put in. If you're planning on trying to stop yourself out of a biotech, you need your head examined. What else was there? Was something I just, speaking of the AGN, you had some leap activity there off the Tepper news today. Nothing else though, just leaps. Some of these medical names, Bristol Myers continues to see action. Slow, but you know, doing a thing. The focus there has been April. You April. That's what I mean. There's still a decent amount of stuff out there that looks um, a lot cooler than the hot stuff. You know, there may not be as much. That IGT, that pig finally got going, ran into another niner. Look at this poor bastard. She gets into a little rally going, bink, nine. This thing can't get out. Oh, this poor IGT. A guy from JP Morgan Fast Money says buy stocks now. Who? That Fast Money crew. They've been talking about a market crash forever, some of those guys on there. But yeah, these guys could tell you, George, buy stocks now. They don't have two nickels to rub together, and they don't own a stock in their account. It's easy to say buy stocks now. Yeah, XOP caught some interesting action today. Chevron's been catching action. Yeah, so the energy stuff, I'm not a big energy fan. I'm not going to lie to you, but if you're looking at it, has been seeing some flow. CVX yesterday, a little more today into red. XOP, but yeah, I agree with you, Alex. Oil's tough. I wouldn't get too crazy there. Oil's always tough. You know that. You're making a bet. You're making a bet on crude. Like that's what it comes down to. I think that's what makes it so tough. Like it's whatever crude does, they're likely to do the same. I don't know, like, what was the reasoning behind that, Gordon? Why these solars get hot? Okay. Speaking of like quality action, here's a name, right? Solar Edge. They bombarded. You're talking about legitimate sweeper activity in this Solar Edge. I don't know why, but look at this. That's a big move. The other one, the action wasn't as good looking, but CSIQ, these things got hot. That's what I mean. We keep our eyes open. There's more than enough momentum to fool around with, but we'll keep our eyes open for rotation. I think that's the big thing here while we allow some of the hot stuff to cool. TRXC. I get that confused with the other one. I didn't see any action there. TXMD. I always get the two confused. We've been seeing a little action here. TXMD. I think this is a biotech. The other one's robotics, right? Or vice versa, one or the other. Yeah, see, you got biotechs. We already talked about big pharma. The banks, somebody mentioned the banks. And it's okay, though. Okay, we spoke about the banks. If you remember, I think it was the last webinar. This is exactly what you want to see. This is what we want some of the hot stuff to do. I mean, this is too hot. This is the problem with like chasing that. We were talking about that. Remember, if you buy Bank of America here, okay, you're up for a couple days, but if you don't take that, now you're caught in this. Okay, and now you're waiting it out depending what strike, what month, how long is this thing going to breathe for? So instead, wait for the breather, even if it went higher and came later on. Let it die down here. Let it sit. You want the action to go dead, which that didn't even happen yet. There's still some flow. And then, as soon as you see an uptick in sweeper activity, that's when you want to get in again, So, for everyone that you don't chase that runs away from you, there's always several of, things like this. You're always better off waiting for at least, even if you buy Bank of America now, you were better off. Even though it doesn't look like a big deal. Instead of buying it here, you bought it off this pull now, you were better off. over the long term, you're better off. Wait for a little breather. That's all. It helps out because options, that's the thing, Gordon. It's the options, the time, that's what makes options so difficult. Not only you got to predict or be right on the direction, you got to be right on the timing. And if the stock goes sideways, okay, and you're not even wrong, you still lose money, right? Even if you weren't wrong, okay, if you're bullish Bank of America, you're not wrong. There's nothing wrong about this. But if you're in calls, you're losing money. That's why in the option game, for swing trading, for position purposes, you can't chase. You can't chase. It's not worth it. You'd rather be a little early off a pullback or consolidation than chase. I know it sounds crazy initially, but trust me. All right, boys and girls. So we'll see what goes on. Again, keep an eye on the sweeper activity. In my opinion, it's been telling throughout this whole process. As long as they're staying aggressive, as long as we have new names each and every week that we're looking at, whether you like them or not, whether you're looking to play them or not, as long as there's initial activity, quality activity out there, that's telling us there's a risk-on environment out there. It's got nothing to do, whether you like the names or not. EA, honestly, I know, you guys may not want to hear it, the EA, but it's something to watch tomorrow. Like I mentioned earlier today, I think this is something to watch off weakness. I really do. I mean, this thing is getting bloodied up, right? What'd they do? They quit the business? Well, obviously, whatever negative news they happened to announce wasn't factored in. I can say that. They got headaches. These games, a couple of you guys were asking me about ATV. These gamers are tough. Take-Two, they're tough. You know why? Here's why. You see this? They started selling off in October. I know EA's a little different, but you guys were asking me about ATVI and all. I don't know, if they come out with a bad number and bad guidance, I don't know how much is factored in, They would have to come out with some good news. But anyway, we'll see, If you're looking at EA, if you see some flow tomorrow into weakness, that's legitimate action. And if you're interested, you fire away. But earnings was a menagerie. All right, guys. Good luck the rest of the week. All right. Try to avoid chasing. Even if you're waiting for little breathers and fades, it's worth it. All right. We'll keep an eye on the sweeper activity. Take a day-by-day approach. And we'll see what Mrs. Market has installed here. Oh, by the way, Powell tomorrow night, 7 o'clock. Powell speaks tomorrow, 7 o'clock tomorrow night. You got the State of the Union tonight. I don't know if that means shit, but whatever. All right. Be good, guys. I'll talk to you guys next week.